In this video, we're going to talk about what do lenders look for in your loan file to approve you or decline your mortgage application. Check it out. Hi, I'm Rhonda Burgess, and I'm a mortgage underwriter and real estate broker here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. Okay, I'm staying in the same little vein about the underwriting, your debt to income ratio and all of that stuff, because I really want y'all to be, when you do make this move and get your property, I want you to be prepared. I want it to be a smooth transition for you. I want it to be a smooth transaction for you. Okay, so we're going to talk about what do lenders look for in your loan file. First of all, and some of this, there's nothing you can do about. So let me say that right now. Some of it, there is nothing you can do about. When I get a file and it's coming from your lender, as the USDA, as the FHA, as the VA underwriter, right? I'm underwriting on the backside, meaning you've applied with a loan originator. They've packaged your stuff, got all your information, your documents together. They've run you through the desktop underwriter. Now it's coming to me as the underwriter to actually check everything on that checklist, make sure everything that the desktop underwriter said we got to have, that you got to have, and make sure that the numbers that your mortgage person, your originator put in are correct. It's really that simple. So one thing I'm going to do is, when I get your file, first of all, if your file is not in order, I'm already skeptical. But this comes on your loan officer. This is not on anybody else. Every program, every mortgage program has a checklist and an order of how they want that file. Credit documents, appraisal, different stuff. It's in a certain order. And it's in that order so we can move fast. I don't want to dig through 100 pages looking for your W-2s. I don't want to dig through 100 pages looking for your check stubs. You slowing me down. You are costing me time, okay, as the underwriter. So when you go to your mortgage originator and you having your appointment and they all over the place and they don't seem like they know what they talking about and they ain't got their papers in order and everything's a mess, your file liable to be a mess. Your file liable to look just like how your originator is coming across to you. Scatterbrained, no order, chaos, confusion. If that's the vibe you getting, get them go. Go find somebody else. Go find you somebody else. And don't take the fact that some people, mortgage originators, to me, are just like real estate agents to a certain point. If they start off with this, I've been doing this for 15, 20 years. Just because you've been doing something a long time don't mean you've been doing it the right way. That's all I'm going to say. So if they're a mess, your file liable to be a mess. And if your file is a mess, I'm just going to be honest with you. Underwriters are human people. So we're going to have a bias against that file. If it's a hot mess, it's taking me longer. You know what I'm saying? Like if it don't make sense, if it's slowing me down, then I'm going to have a bias against this file. Because that's just human nature. Because you can't follow basic instructions. So what are we doing? And you done gave me all these pages and they ain't in no type of order. And it's just a hot mess. So but again, as the consumer, as the actual buyer, there's nothing you can do about that. But just peep game when you go to some of these originators, because some of them don't know what they're talking about. And let me go one more time. The loan estimate, when your loan officer, your mortgage originator is going over the loan estimate with you, if they can't explain half of the line items on there, you with the wrong people. I have sat in on mortgage origination applications where the loan officer didn't know like what the tax service fee is. They couldn't explain a discount point. They can't explain a lot of stuff on there. Listen, I don't expect the loan officer to be able to tell you all about title, okay? But you should be able to explain just basic title insurance. Why you have title insurance. What the binder is about. You know what I mean? Just basic elementary stuff, in my opinion. If they can't do it, I would personally, I don't know if I would trust my information with that person, because if I'm finna spend $500,000, let's just say, right? Even if I'm spending $100,000 and you can't explain to me all these, all these fees and stuff that's being charged, something ain't right. I don't like that. That's just me. I digress. Okay. So let's say the file comes in and it's right. It's in order. It's neat. It's cool. You done gave everything, including the kitchen sink. First thing I'm going to do, first thing is when I'm looking at your credit, do you have a good mix? Do you have a good mix? Did you get your credit score only off of a thin credit file? Because see, there's a thing we have to do where we have to validate your score. Do you have at least 3 trade lines that are yours and not authorized user accounts? Because see, a lot of people, we be playing these games for years. Oh, you got a 730 credit score, a 750 credit score, but you ain't got number 1 trade line yourself. You are piggybacking off of somebody else's credit to get that credit score. So your score is invalidated. Yes, we do a thing called credit validation. We look and see how many trade lines do you have. And different lenders, meaning the people, the ultimate people who going to lend you the money for that house. Okay. Everybody has their own criteria. Some will say, well, you need to have at least 1 trade line with at least a $5,000 credit limit that's been open for at least 12 months in your name, not an authorized user account. Do you have that? Or they may need to have 3 credit lines that are in their name and at least 1 needs to be open. Is your credit score high because you used to have credit and you've closed everything? Do you not have any active open trade lines? That's going to be a problem. That's going to be a problem. Remember what I've told y'all, the credit score just says how you operated in the past, and it is predicting how you're going to act in the future. Okay? So again, we've got to validate your credit score, because a lot of people, you can end up with a good score and don't have nothing going on and don't have no credit. So again, you're not credit worthy. Just because you have a high credit score, you're not credit worthy. Did a video about this the other day. Just because you have a high credit score doesn't mean you're credit worthy. So we have to validate that debt. So when I'm looking at that credit file, I've got to validate according to whichever lender is going through, or just like our internal guidelines of how many trade lines and what's the high balance have to be, and does it have to be open, and how many months has it reported. Those are things that happen. So again, if you're coming with a thin credit file, you may not qualify. You have a thin file but you have a high score, you may not qualify, because we've got to validate that debt. The vast majority, when you're looking at your credit score, that is driven by your revolving debt, your credit cards, your store cards, your gas cards. Revolving credit is what drives the credit score. But also, you should have some installment debt. You should have a mix of credits. Installment debt, credit, car loans, signature loans, personal loans, student loan. Right? Where it's a set payment. You borrowed $5,000, you paying $500 a month. That's what it is. It does not change. So you would want to have some installment debt, because normally your installment debt is where you're going to find those trade lines to validate your credit score. So those trade lines where you got to have at least a $5,000 balance and report it for at least 12 months. That's normally where you're going to get that from. Now, don't get me wrong. You can get it with credit cards too. Like if you have credit cards with a large enough balance, but most of the time for most people, that those lines, at least one of the lines to validate your credit score, is going to come from installment debt. Okay. So after we look at your credit, we're going to run you through all kind of systems to make sure you don't owe the government and that you don't owe anybody else and that you don't have no judgments. We're going to go look into your, your local public records as far as judgments and stuff like that is concerned. Then I'm going to look at, once we get past the credit, which as you can see, credit can take a while. Just doing the credit can take a while. But once we get through with the credit, then I'm going to look at your income. Okay. Have you been on your job? Have you been on the same job? Are you a job hopper? If you job hopped, are you still in the same field? Did you go into another field? If you went into another field, why, how did you do that? Have you been in school? Did you go back to school? Did you get a degree? And so now, you used to be, let's say you used to be a waiter or a waitress, and then you went to school and now you're a nurse, you're an LPN, you're a RN, you're whatever. I need to see how that connects. Because you can't just go from one to the other. You can't go from being a welder. Let me just pick some wild stuff here. You can't go from being a welder and you were making all this money to now you're doing commission sales. It's not gonna line up right. And so if you do have those breaks in your employment, that's cool. It's not a problem. But I need to know, I'm gonna say this again. I said this in the last video. Put a letter in there. Explain to me what happened. Explain to me what happened. Because if you were a server in Michigan and now you're living in Florida because you had to go down there and take care of your mama or your daddy or whatever, and now you're a car salesperson. Cool. I don't have a problem with it. But explain it. Explain it. If you know you've got gaps in your employment. I was without a job for 6 months. I couldn't find a job. Say it. That is fine. It's better to say it than for me to just be like, what is it? This person hops around a lot. They be having large gaps in time where they don't have no job. I mean, are they credit worthy? Do you see you see with the question that I would have as an underwriter? So answer the questions before I ask it. Underwriting to me is just like being a parent. Okay. For all my parents out there, when you ask your child a question, you already know the answer. Okay. Am I lying? You know what I'm saying? Little Johnny, did you eat them cookies? Because I just looked in the cookie jar and ain't no cookies in there. Did you eat them cookies? You already know little Johnny ate them cookies. Okay. But it's the fact that you got to ask. See, if I got to ask you and you grown and you well past grown, we finna have a problem. Because your file was probably already a refer. It was already shaky. It was, you know what I'm saying? Just fix the question. Answer the question before I ask it. Fix the problem before there is a problem. Okay. So I don't look at your credit. I don't look at your income. Then the next thing I'm going to do is I'm going to look at the appraisal. I'm going to look at the property, because sometimes I don't know why people get so fixated on the most jacked up, raggedy piece of property that don't make no sense. You know what I'm saying? Like, you put on the paper that it's a husband and wife and 6 kids and you trying to buy a 2-bedroom. It don't make sense. There's so much that just don't make sense. Okay. And so then I'm going to look at the property. I'm going to look at the appraisal. It still got to make sense. It's got to line up. As everybody says these days, make it make sense. It's got to make sense. Okay. So then once I get through all of that, let's say that's good and the property's good and everything, then I need to look at your insurance, because your insurance might blow your whole deal. It might blow your whole DTI. And why is that? Because it may be where you're buying. The property may be in a flood zone. A property may have just experienced some natural disasters, some hurricanes, some tornadoes, some just general, disaster type stuff may have happened. Are you high risk? And that's why you got a higher premium. Did you pull your clue report to see what other claims have you had out there. Because see, if I get to the point where I'm all the way down to the insurance, and then your insurance, like let's say your originator estimated your insurance is going to be $125 a month, and when we get that quote, you done got a quote back from whatever insurance company you dealing with, right? I'm not saying one is better than the other, but that bad boy turns out to be $325 a month. What is the problem? Is it you or is it the property? You see what I mean? There's so many moving things, but just if you can, I suggest if there's anything that's questionable, meaning, let's say you've changed jobs. Let's say you, like I said, with the child support, you getting income or you paying out income. The same difference. If you paying that money in child support, put a letter in there. Put a letter in there to say, yes, I pay the mother of my child, the father of my child, X number of dollars. This has been our agreement, for forever, and this is it. If you got a child support or something agreement, even if you made it yourself and both of you signed it or whatever, include that. Don't make me go look. Don't make me go look, and don't make me ask questions, because then, especially if you shaky, we going to have a problem, and you going to have a hard time getting your file approved and getting in the house that you want.